For those of you in the room right now, Pavel is a few minutes late, and he will be here shortly. Thank you.
Hello. Hello. I'm on.
Hello, can you hear me?
Yes, I hear you.
Ah, perfect. Hi, Pavel. I'm Sam. Do you have a presentation that you'd like to share with today?
No, this is
Okay,
just
just your
like a
webcam.
fireside chat.
Perfect. Okay, okay. Um, okay, before we get started, how do I say your last name?
First name Pavel, last name Molchanov.
Okay. All right. Well, hello and welcome everybody. Today we have Pavel Molchanov, investment strategy analyst at Raymond James and Associates. Uh, Pavel joined Raymond James Investment Strategy Team in 2025, following 21 years, 2003 to 2024, in equity research. His work in investment strategy focuses on the thematic areas of energy, climate, mining, and agriculture. During most of his time in equity research, he covered companies in renewable energy and clean technology. He had been recognized in the StarMine Top Analyst Survey, Blue Chip Analyst Survey, and Wall Street Journal Best on the Street Survey. He graduated cum laude from Duke University in 2003 with a Bachelor of Science degree in economics with high distinction. In the broader community, he is involved with the University of North Carolina, the Royal Institute of International Affairs in London, and the American Geophysical Union. Pavel, the floor is yours. If you need anything, I'll be right here.
Thank you very much. Good to connect with all of you, as I've done for several years. We will have time for questions toward the end. So, the more the merrier. Ask anything you want in relation to kind of energy, climate, sustainability, anything that's on your mind. So I will give an update on what's going on with oil, with natural gas, and with renewables, and then we can, again, in the Q&A, we can zoom in on anything specific that is of interest to our listeners. Well, let's start with oil. Prices have been pretty range bound throughout the first 8 months of 2025, with a bit of a tilt to the downside. If we had this conversation, in April and May, kind of right at the height of the trade war, oil briefly went below the $60 a barrel level. We're just above the $60 level currently, which reflects, number one, the U.S. economy is slowing. Is it a recession? No, but it certainly is slowing. We see that in the jobs data. The Chinese economy is also not in great shape. And let's remember, why do we care about China? China is the largest oil importing country in the world. And if their oil demand is weak, then that's going to pressure oil prices. Situation is actually looking better in Europe economically, but broadly speaking, global demand in 2025, might be up 0.5%. And I know a lot of people will, probably have this on their mind. Are we at a point where global oil demand peaks? Not yet, but it's close. My prediction is before the end of this decade is out, global oil demand is going to peak. It's hard to pinpoint kind of the precise year, but we're definitely getting close to that. So, if you're investing in the oil industry, you might want to keep that in mind. I think prices over the next 6 to 12 months will kind of stay broadly where they are currently, $60 to $65 for WTI, Brent, a little bit higher than that. Bias to the downside, I think prices are more likely to go down than up. Keep in mind too, we talked about demand. OPEC supply is ramping higher. They are unwinding the production cuts that they had kind of in the COVID era. And as OPEC supply ramps up, while demand remains soft, that is a recipe for prices to be, no higher than they are today, barring some type of, extreme geopolitical event. We saw not long ago, a couple of months ago, war between Israel and Iran. That pushed oil prices higher, but it lasted for barely 2 weeks. Why? Because ultimately nothing happened to oil supply. Iran continued to export as much oil as it did before the war, and nothing's fundamentally changed. And that's why you saw a brief spike up, but it came right back down. We've seen this movie many times before in relation to Middle Eastern politics. Okay, natural gas. U.S. natural gas prices, this is, Henry Hub, are higher, meaningfully higher than they were a year ago or 2 years ago. And why is that? A lot of this is because of AI. I think everybody who's dialed into this knows there is a ton of data centers, particularly the large hyperscale data centers getting built across the United States. And as a result of that, electricity consumption in the United States is growing. It's very different from the situation with oil. We got meaningful, really robust growth in US electricity demand, a little bit from EVs, but mostly from data centers. And so here's just kind of an amazing statistic for you. Between 2024 and the end of this decade, US electricity demand is likely to grow more than in the previous 24 years put together. Just think about that. That's why, all the utility stocks are up, and all the companies that are supplying the utility industry, think of the different, turbines and, smart grid equipment makers. Those stocks have also been on a tear. So we got this boom in electricity demand, and natural gas is certainly an important role in supplying that additional demand in the electricity market. Now, US electricity is constantly evolving. 20 years ago, more than half of US electricity came from coal. Today, it's nowhere near half. It's more like 15%. So coal has fallen off a cliff. Okay, natural gas has grown a lot, continues to. Wind and solar are growing even faster than natural gas. Now, let me touch on the renewable aspect of this. As many of you remember, a new federal tax law was passed this past July. And that law changed the rules regarding a lot of tax credits, particularly these clean energy tax credits. You might think that, okay, this is the end of wind and solar. No. Projects for wind and solar that begin construction any time through July of 2026, so it's a year from now, will continue to be eligible for the tax credit. And then those projects have 4 years to get built. So if you're thinking about, through the end of this decade, you're going to have a lot of growth in wind and solar in the United States still, because the way the law was written. And then beyond 2030, well, that's obviously going to be a question for, whoever is in the White House at that point and whoever is in Congress at that point. But for the next 5 years, wind and solar are still going to be growing in the US alongside natural gas. Nuclear, okay? Nuclear always gets a ton of headlines, always in kind of an interesting talking point. But I just want to make sure everybody understands. Nuclear projects are always a marathon rather than a sprint. Do not expect new nuclear reactors to get built in this country prior to 2030. There's a lot of hype, a lot of excitement around nuclear. I get that. But that does not mean that we're going to have a bunch of new reactors actually generating power over the next 2 to 3 years. Everything in nuclear takes a very, very long time. The only nuclear reactors that you will see starting to operate prior to 2030 are these kind of old mothballed reactors that are being brought back into operation. So, for example, there is one in Pennsylvania, 3 Mile Island. So these projects do not need to get built. They already exist. They just need to be brought back into operation. Even that, by the way, takes a few years. Okay? But with any new nuclear project, you know, what all these data centers love to talk about, 2030 or beyond, there are nuclear reactors currently being built in the world, but not in the United States. China has close to 30 nuclear reactors getting built. There are some in the Middle East, a handful in Europe, but there are no nuclear projects physically getting built in the United States today. Not sure if everybody understands that, but just wanted to make sure expectations are set, because I do feel like sometimes there's a little too much hype around nuclear, especially with the AI conversation. With that, I will take any of your questions. Fire away.
There isn't any questions from the audience at this moment. Is there anything you want to touch back on for the remainder of the time?
Let me touch on electric vehicles, because I think that also always gets a lot of hype. So first of all, if you are considering buying an EV, okay, and you're an American, you live in the US, you're considering buying an EV, you have until September 30th to buy it and still get the tax credit. That tax credit, the one for electric vehicles, it's $7,500. That tax credit will expire at the end of this month, at the end of September. Okay, so if you're thinking about it, just wanted to put this on the table. The clock is ticking. Because there is this expiration date for the EV credit, we are seeing right now pretty strong US EV sales. But then they're going to go down after September 30th, towards the end of the year. And I think 2026 is actually going to be a down year for US EV sales. But in the grand scheme of things, US EV sales were never particularly strong. I mean, only about 1 out of 10 of US autos are electric. Let's look at China, because this is, I think, astonishing. In China, in the month of August, 55% of auto sales were electric. More than half. I think that's astonishing. By the way, China is the world's largest auto market. So when we think about global EV sales and the way they're starting to affect oil demand, which we touched on a minute ago, it's not a US issue. It's really about China. So more than half of the auto sales in China right now are electric, and that percentage is going up rather than down. So when I say global oil demand will peak before the end of the decade, that has nothing to do, or almost nothing to do, with the US. US oil demand has already peaked. But in China, oil demand is on the cusp of peaking. And the reason it's peaking in China is, number one, sluggish economy, but even more importantly, it's this bull market in Chinese EV sales that is way ahead of the US. and even ahead of Europe. I mean, Germany, UK, about a quarter of their auto sales are electric, but again, in China, it's 55%. So, it's good if you're a Chinese EV company, not a good thing if you're in the oil industry. Because remember, oil's a global market. So an electric car on the road in China is exactly the same effect on oil demand as an electric car on the road in the US or anywhere else. Any questions?
Yes, yeah, actually now we have now we have quite a few now that I've asked. Let's see. What do you think about copper prices going forward?
Um, so I'm bullish on copper. Keep in mind, prices have already rallied a lot. So this is, it's a little bit like gold. This is a bit of a momentum, kind of a crowded trade. Just keep that in mind. But I'm bullish on copper because copper is an essential building block for this electrification boom that we are seeing around the world, right? I mean, what's copper used for? Anything that has to do with electricity, you need copper. Power lines, obvious example. A lot of the machinery for electric grids needs copper. So more electricity means more demand for copper. This is a worldwide story. Copper supply is growing, but demand is really kind of propelling it higher. So I think copper prices are more likely to go up and down. I'll just mention we have in the United States we have a tariff on copper. So U.S. copper prices are already higher than the world average, right? Because we have a 50% tariff on copper since a couple of months ago. Just bear that in mind.
ITER project in France for fusion energy. When will it start producing profitable fusion energy?
Okay, so I said that nuclear is a marathon, not a sprint. Everything in nuclear takes time. Fusion is way, way out in the future. Fusion has never been a commercial technology. This is what we call a science experiment. So anything you read about fusion, just keep in mind this is not the normal nuclear reactors that we've had for 50 years. Fusion, completely different concept. There has never been a commercial fusion reactor anywhere on the planet. What is the earliest that somebody, there are a lot of startups doing this, venture-backed companies. And then the question was about a project called the ITER, which is a government-funded project. It's got the Europeans, it's got the Japanese, it's got the U.S. involved, Korea. So they're building this in Europe, but we're talking at the earliest 2035. Okay, it's a decade from now, and I think it's going to be longer than that. So it's kind of one of these fascinating things to look at, and it's going to generate a lot of headlines, but do not hold your breath.
What is your opinion on investing in oil wells in a limited partnership arrangement?
Well, so what I said is oil prices, I think, will be flat to down from here on out. So I'm not particularly bullish on oil. Can oil companies make money at $60 a barrel? Sure. They're making plenty of money at $60 a barrel. I mean, I can't really give advice on a particular limited partnership that obviously depends on kind of the specifics. There are plenty of these types of arrangements in, Texas, Oklahoma, North Dakota, but fundamentally, you're subject to the volatility of the oil market. And my prediction is flat to down oil prices over the next 12 months. So, you can look at the specifics of that particular deal, and when you look at it, I would just ask the question to whoever is, organizing that partnership, what kind of cash flow would these oil wells generate if oil's at $60 and then maybe test it out at 50 or even 40, right? And if prices go up, great. But if prices go down, as we saw that during COVID, of course, you want to stress test to make sure that particular business is still going to be viable and hopefully, generating some earnings.
What innovations are you seeing in renewables? Any breakthroughs in battery technologies in the near future?
So there's always innovation in renewables. I mean, I mentioned, well, it's not technically a renewable, but fusion. I mean, okay, so that's a science experiment. I mean, I think more kind of day-to-day stuff. Look, a solar panel that you buy today is going to be more efficient than a solar panel from 5 years ago. A lithium-ion battery in an electric vehicle is going to hold more range than a battery from 5 years ago, meaning you can drive longer, on the same sort of, same vehicle, because the battery contains more electricity. Now, batteries, when it comes to electric vehicles, it's all lithium-ion batteries. There are some what we call novel chemistries with regard to batteries outside of lithium ion. So some of you might have heard of nickel zinc, or liquid solid state batteries would be another one. Now, solid state typically has lithium, but nickel zinc does not have lithium. So it's a way, lithium prices are high. So nickel zinc is a way to reduce or minimize lithium consumption. We don't really have nickel zinc batteries in EVs, but these new types of batteries are being used in power storage systems. So if you have if you want backup power for your house, you can get a storage system. Or if you got a giant wind farm in Texas and they need to store electricity, they could get a nickel zinc system. There are vanadium batteries. There are molten salt batteries. These are pretty early stage technologies, but just to give you a flavor of what's going on. But in regard to electric vehicles, the new flavor of batteries is called solid state. So in theory, right, because this is also not yet in the commercial stage, but what we could see is, today, if you buy an EV, it can drive kind of at the low end, maybe 200 miles, at the high end, 350 miles, okay? What if you could buy an EV that can drive 600 miles or 800 miles on a single battery charge? That would be a game changer, particularly in the US with long distances between cities. Not as big a deal in China, but it's a really big deal in the US. So the companies that are developing these solid state batteries, it's still R&D, but there is some progress, and some of the big automakers are looking at the stuff with a lot of interest.
10 years from now, what do you think the electricity generation mix will look like globally? Will solar and wind dominate, or do you see nuclear, natural gas, or emerging technologies like hydrogen play a bigger role in powering the grid?
Right. Well, so looking at globally is not super meaningful because it is so different from country to country. So like today, right? So let's do the U.S. And maybe I'll give you a few others. So the U.S. today is about 40% natural gas, 40. I think that percentage will be a little higher in 10 years. Wind and solar in the US today is about 15 together, 5%. That's going to be a lot higher in 10 years. Nuclear in the US is around 20% today. I think that will be pretty stable, kind of a plateau over the next 10 years. Coal today is 5%. That's going to keep going down. Now, it's already fallen from 50, right? So it's at only 15 currently. So you obviously can't go below zero, but that will continue to trend lower. Let me give you China as a different example. In China, 60% of electricity today is coal. China burns more coal than the rest of the world put together. That percentage is going to go down over time. But keep in mind, the pie in China, the whole electricity pie, is also growing a lot, even faster than it is in the US, right? Because it's an emerging market. You have more of everything in China. So they're going to need more electricity from practically everything. So the percentage of coal will probably go lower, but they might still be burning. In fact, they're definitely still going to be burning a ton of coal 10 years from now. Nuclear in China today is in the low single digits, and that will go up quite a bit, because China is building about as many nuclear reactors as the rest of the world combined. China also installs more solar than the rest of the world combined and more wind than the rest of the world combined. So those numbers will go up a lot. On the other hand, natural gas in China isn't really growing. Why? Well, because in the United States, we have all the natural gas we could want, so it's really cheap. But in China, you have to import natural gas. So they're either importing it from Russia by pipeline or from Australia in the form of LNG, but all of that's expensive. So China would rather build its own nuclear plants, solar plants, and wind, rather than keep importing expensive foreign natural gas. By the way, in Europe, it's a similar story. Europe historically used a lot of natural gas, especially from Russia. But after Russia invaded Ukraine 3 years ago, Europe had to switch out of Russian natural gas. And they are buying some from the United States. But again, that's expensive. So Europe would rather build its own, in some cases, nuclear, but mostly wind and solar, rather than keep importing natural gas. So I know that's a long answer for you.
Well, that's all we have time for today. Thank you, Pavel, for the presentation, and thank you all for joining us. We have more in store today, so we hope to see you in the next session. Thank you, everybody.
Take care.